Hey, let me know if y'all can hear me.
Hello.
P Money the Great. What it do?
I'm all good. How you doing?
Good, brother. Good. Got a lot of extra rest today.
You got some rest today?
Yeah, I had a long day yesterday. I worked a lot more than I needed to. So I slept this morning. I didn't even trade.
Cool. I want to show you my I really want help to see how would you enter a trade? Well, yeah. I just want to show you my chart real quick.
Go ahead and make it happen. You know what to do.
Okay. Share screen. Can you see?
Yes, I can. What up, Augie? Augustine, you there?
Hello? Can you guys
Hey,
hear me?
brother. Yes, doing good. How about yourself, brother?
Feeling a little iffy, but doing pretty good, man. How are you?
I am feeling much more rested.
That's good, man.
16-hour workday yesterday, guys. I had to sleep today. No trades for me.
16 hours. Holy smokes.
Yeah, I had a lot of
Yeah,
one-on-one
definitely needed the
students.
sleep.
Yeah, I needed it. All right, P Money, show me what you got.
Okay, so I don't trade before news no more.
Good job.
Yeah, so if it wasn't news, I would have took this trade right here, but whatever. So I don't trade before news, especially going around now. Okay, hold on. Okay. So okay. 15, what is 15 like? Okay. Well, this was my trade today. And so I had that okay, so then I went to the 1 minute. Okay. So I had this 1 minute, which was okay. So this is like my higher time frame POI right here, but I know gold will I'm like something like for higher confluence for me, I will still do my 1 minute POI, which is this one, and then I will still have this POI, which is I really will. This became like a 3 minute POI right here, so I really would
Start it back from the top. Bro.
Wait, what do you mean?
Start 4 hour. Let's go.
Okay.
Walk me down.
All right. So the 4 hour time frame, I'm like, okay, we're looking at sales today. And then I went to my 15 minute time frame and I drew this right here. This was my original, this is my original POI. And then price broke it with news, and I ended up bringing it down here to make this one.
Okay.
So now I go to my lower time frames. And like I say, remember you said how I chose what I want to do. So I sometimes, in some cases, I treat my 5 minute just as much as my 15 minute POI. So this is my 5 minute POI, this big thing right here. And then that's why I would have it right here. So price came down. Okay, so and then news hit. And I also have a 1 minute POI in here, as of right here. And this is my large and my higher time for POI, the red. So I draw my fib from here. Draw my fib from here. and then start going to my 1 minute, my 2 minute time frame. I do 1, 2, doesn't matter. And then so price is back in my POI right here. And I look forward to go to 6. I've been seeing gold really respect this 61.8 level. Like I've been back testing. I know back in the day, something like this I would have tried to take this, but I don't. That was horrible. But I've grown. So now we're in. I have a confluence of. I see my 61.8 level being tapped. I'm in both my POIs, my larger time frame POI, and I'm in my 1 minute POI. So that's a nice confluence for me. And I really trade from the 2 and the 3. So so bam, I know I'm on the 2 minute. I'm taking this because I like my inside bars where I like to at certain fib levels. So, and then I'll double down on this one because I see my 3 minute inside bar came. Oh, I actually missed the 2 minutes, so I end up taking this one. But so I have a question for you. I know this might not be your style of trading, but still, where should I put my stop loss? Should I put it right above here, or should I put my stop loss above the zone?
Personal preference. Either the safest place above the zone.
Okay.
The more aggressive place. 61.8 is the same thing as just premium and discount pricing, right?
Yeah, I know, and I know in that plus, and also like the golden zone, like that's when I first started trading. So yeah. I know about the golden zone, and then you guys say the premium discount. So that's just a nice confluence for me.
It's the same thing.
Yeah, same thing.
Like I traded golden zone when I first started trading. All a pullback. I mean, all the 61.8 and golden zone is just supposed to be is to let you know that price pulls back. That's it.
Mm-hmm. Yeah, because I know sometimes like before, like sometimes I was trying to take a trade from the 38. I know Rob was like, he says like you shouldn't do that. That you always try to go from above half. And I know you do the same thing. So
no, I don't.
Oh, you don't, because I know you wait till it goes to equilibrium pricing, don't you? From 50 to 60?
Nope, I don't. Equilibrium is anywhere from 40 to 60. You missed that in the video.
So anywhere from right here, you damn near taking a trade.
Yep.
If it fits it, okay.
Because we don't live in a perfect world. A perfect world would be 50%. That's why people made the golden zone.
Yeah.
But in a real market, that's not what happens. Sometimes it's going to go from the 38.2. Sometimes it's going to go 61.8. Sometimes it's going to go 78.6. Sometimes it's going to go 85.4. You can't base it on a certain number. That's not enough to decide to enter a trade. So I don't just enter trades just because it hits the 38.2 or 61.8 or 50 at that card. That's like guessing. So you have to combine it with other things that give you confirmation. Now, if you want to be real aggressive, you could put your stop behind the 78.6. Yeah. But if you want to be the safest, you would put your stop behind the zone.
Okay. So yeah, that's what I wanted to ask you today. And okay. So just say if I would have took a trade, I end up taking another trade in here too. I didn't even go through there. All right. So either zone. So like, what would you do? Yours changes different times, huh?
Or yeah, but it's always based on the same principle. Always the value changes, the principle doesn't. That's that's a rule. I have a rule, and I'm just following that rule. Does not say you could make a rule say your stop is always 2.500 on gold, and that be your rule. But that's based upon a static. That's based upon a static market, and let some volatility fly in the market. It's going to tap you out, and then you're going to see price go your direction, and you're going to sit there and say, "Well, damn, what did I do?" Your stop loss should be determined by structure. It should not be determined by a static number, because the market never moves a static place. One day it moves 10,000 pips. The next day it only moves 1,000. So how you going to base it on a number that's going to constantly change? That should constantly change. So you need a rule-based system based on something else outside of a number. If you make it based upon the zone, then it's based upon the zone. And sometimes the zones are big, sometimes the zones are small, but it's always based upon the zone. But the thing you need to keep in mind, stop loss is not about a number. The whole point of a stop loss should be the point in which your trade idea is no longer valid. That's the whole point of using a stop loss.
No longer valid right here.
If that's what you feel is no longer valid, then that's the point you should put your stop loss. Because what's the point of being in a trade that's going to keep going against you?
Yeah.
And your setup is no longer, like, you have to think in probabilities. Where is the probability of my trade? 0. If that's the place, put my stop loss there.
Up here, just extreme. Extreme. If price goes up here, I will still look, but I wouldn't go in this time frame anymore because this still is a higher zone. So I will be on a different time frame, and then this will be extreme. Yeah.
Your stop loss should be on the time frame that you take the trade. That's what you should be basing everything on.
Okay, then exactly. Then it should have been here. Well, okay. I started looking at the 2-minute late because I'm like, I started looking at 2-minute late, so I end up.
But what time frame were you taking the trade on?
I took this time frame. I think I took this time. I took more than one trade in here. I most definitely took it right here. I took it on 3-minute, but this one, I'm like, damn, I should have took it. I seen it on the 2-minute, but I'm like, man, I don't know, but I should have went for it. But the 3-minute, I took it on 3-minute for sure. I took it on 3-minute, and my stop loss was like, and I waited for price to come up a little bit more, so I took it like right here. My stop loss was like 26 pips, like so something like that.
Okay. Well, then it was based upon, if you took it on the 3-minute, base your stop loss on where your 3-minute idea is no longer valid.
Yeah, right here. I'm thinking like a little order block for me too. So, and then so I thought price was gonna come. I thought price was gonna come lower. So I took like multiple trades in here. So, but I thought price was gonna come lower. So let me show you. So, but I didn't. Thought price was gonna come lower. So price came. I still stayed in, and then I drew a line. Like right here. And I'm like, okay, because price is flowing, but I'm thinking price is gonna break through. So I'm doing like, okay, I'm waiting for it to break through. It never did. But I said I'm gonna close it if price goes back above this line. And price went above this line, so I closed it. But I know, I don't know if it's you or Rob, but you guys, somebody says take out this low. So should I have gotten out right here? Because I'm gonna show you my Tuesday's trade where I ended up getting out, and I could have had like 20 yard if I would have drew this line, because all price did was just come back to this line and drop down a little bit more. But I guess today it didn't do that. But still, should I have just taken my profit right here?
Why did you draw that line?
Just because of this right here, like lower low, lower high, and just like structure, internal structure.
Okay, well then that's the basis of why you got out the trade.
Exactly.
I mean,
but I'm saying, but what about, should I have got out right here by it taking out the last low?
It didn't take it out.
Exactly. It was like rumbling right here.
Yeah, you're still not thinking with market structure. The reason why the other trade probably went and this one didn't, you can look at this one and tell it wasn't going to go.
Because of this right here, right?
Yeah. It's consolidating right at the low. That's not a sign of strength.
Yeah, I thought it was going to be bearish with this one.
You got 4 attempts at trying to take that low, and it didn't. Not likely that it's probably going to break it. Go back to the other one with the other day that you were talking about.
Okay. Let me show. Well, you said 4 attempts. Is it this 1 attempt? Is it this is 2? This is 3?
Zoom in real quick.
Were you about to mark it? Okay.
Yeah, sorry, I was trying to couldn't find it. I mean, you got this is consolidation, bro. Right at the low.
Yeah.
And it took 1, 2, 3, 4, 5 passes and still couldn't go. So good thing you were using that internal structure line, but if you think in terms of consolidation, zoom out just a little bit. Oh, okay, perfect. Look at this. What direction is that all going?
This is down and this is going up.
No, it's going sideways.
Yeah, sideways.
Look at this. What direction is that going?
Down.
Yep. What's the difference between the two?
Yeah, consolidation trend.
Yeah, you got to read the conditions. The reason why Rob said take out these lows because that's what point is that?
This is the lowest point.
No, think about it in market structure.
Market structure, the lower low.
Yeah, so what has to happen if the market's going to continue going lower?
This should take out this.
Exactly. That's why Rob said you should target that. Because if the market's going to continue in a direction, it has to make a what?
A lower low.
Which is what happens when a lower low is broken.
That's a BOS.
Which is a
I don't know, a lower low becomes a lower low, then you get a lower high.
A break of structure, which means price has to break structure. If price is not breaking structure, you should close your trade.
Okay. Well, it's good I close on top of here then. Because then now let me show you the trade. This was kind of similar to the trade the other day. So what trade was that was booming? It was CPI news. What day was that? Friday. Yeah.
It goes back to market structure, bro. Like it's all market structure.
Damn, it did the same. Okay. Man, all right. Yeah, so I just thought it was gonna take it, and I guess it didn't take it. So I ended up getting out on top, but I lost like a couple thousand. But it was a risk I took, I guess.
You have to be able to pick wise targets. Some days it's going to take out, some days it's not. You can't just hold trades and hope that it takes out a low. You have to have some reasoning in what you do that tells you when to get out. It's not just important just to know when to take a trade. You have to also know when to get out, because just because you could have a good trade idea and make no money. You could have a good trade idea and lose money. There is analysis that has to happen before. Then you have to be able to execute the trade. Then you have to be able to manage the trade. So it's 3 parts to making a winning trade, like strategy, plan, and being able to consistently execute profits. It's one thing just to analyze the market. There are great signal callers who can tell you this is an opportunity to get in. They'll never be able to execute. They'll never make money.
I believe that's where I'm at now. Like I know where to enter good, and I believe I'm to the point where like managing a trade, like I know I can get some R's, but it's like at that end there right there, like you said, like like my girl, she was in the trade, she got out. I should have got out. I should have gotten out, because I know it wasn't as powerful. But
your girl trades too?
Excuse me?
I said your girl trades too?
Yes, she does.
Oh, that's dope, man. Y'all about to have money running through the family.
Yeah.
But not, you could have a trade right there. Let's say, for instance, you make your take profit here, right? And let's say, for instance, you got the trade in here. Skip the candles up a little bit. Go forward a little bit on the chart. Go forward. Like
zoom in or zoom out?
Oh, not like zoom. The candle. Replay.
Oh, right here.
Yeah.
It's a 15-minute.
Yeah, keep going. Say, for instance, you got in right here, right? And you have your take profit target is, let's say, further down. Keep going. Keep going. Misses your target. Keep going.
Price ain't gonna go down no more.
Boom, it takes you out. Now, was it a bad trade? No. It's just that you got in right here. Your target was somewhere down here, It did not take it here. What do we have right here?
Consolidation.
Doesn't matter the time frame. It's the same thing. What do we have right there?
Order flow.
Going what direction?
Down.
Is it strong?
Very strong.
Yeah, there's a difference. You have to read market conditions. You can't just blindly set and forget. Like you have to be able to be a manager of your trades. It's like I said, it's one thing to be a good analyst. There are people who can analyze the market great, but they'll never be able to trade. You could actually learn from them. They can teach you how to analyze the market like a pro. They'll never be able to pull the trigger. They have no courage. Then you can be a great executor, which a lot of people start with in trading, execute great, have no analysis. So they just lose money. Then you could have both, but if you can't like manage the actual trade, you'll get in trades that go up and then you'll end up breaking even or losing money. And the whole time it'll be like, well, dang, I was up so much. You ever seen people who take pictures of their equity that they make in the trades only for them to lose it?
That was me. That was me right here. I was up. I do 0.50. I was up around. Let me show you mine on this. I was up around, and I could have had even more. Let me show you.
Yeah, but you can't get into greed. That's the thing. Greed tells you there's more money in the market than is actually available. You have to, the market's going to show you everything you need to know. It's literally right there on the chart. You don't have to go anywhere else.
Yeah.
All you have to do is be a good manager of having some clear guidelines that you follow and say, when this happens, this is what I do. And you have to adjust to changing conditions. I always say, all it takes is for one candle on the chart to completely change my idea on a trade. That's all it takes. Because I'm not taught, you can't be married to an outcome. I'm not married to any one trade. I'm not married to my take profit. I'm not married to my stop loss. If I adjust and see things that need to adjust as necessary, I adjust. Like that's why I watch the market. But I'm not always married to an idea. Like I don't set a profit and says it has to hit this and I have to take it. No, if I see something else that tells me that conditions have changed, then I change and I take my profits. Because at the end of the day, your whole goal is to get profits out the market. It's not to be able to take the pictures of the most R's. It's not because to be able to show that you had the tightest stop loss. It's to really get money out this market. That's the whole point of why we trade. So you have to make a plan for all three parts is what I'm saying.
Yes. Thank you for that. Because today I was like, oh, I'm gonna get 5R. I wanted to play out my fib. And my girl was like, well, why do you think it's going to get 5R? I'm like, I want to play out my fib. So what you're saying is like totally correct. Like I wanted 5R today, but the market wasn't giving me 5R. So like, it was crazy. So you're totally correct. So I just have to like, I'm getting good entries. I'm taking good, I'm patient, but I got to manage them.
You have to manage everything that you do, brother. Everything that you do. You can't just, it's a 3-part process. So
this is I had this right here. This was the CPI day. Man, I had so much money this day. I could have had even more. But this was news all right here. So I was waiting for price to come back in my zone, and it did. I was proud of myself this day because I was patient. I'm like, wow. So price came way up here. And it's top of my zone. And bam, I think I took it right here. It's going to turn. Yeah. So I took it right here at my inside bar. And I forgot what my stop loss was, but I don't know. But it was something like that. And my goal was to take out this low. Yeah, that's fine. My goal was to take out that low. So I started getting on a 1 minute because I wanted some more entries. So, oh, okay. Where did I get in again? I know I got in like right here. I think price gonna pull back. I got in. Price pull back to this one. No, I guess I must have got in down there. So price ended up. I didn't get it. Oh wow. I ended up getting like 2 or 3 trades out of here, but I don't know where right now. So that's besides the point. Okay. Yeah, it was this one I got in again, like right here. So I got in again, but where did I? Okay, and this was it. So yeah, I got in right here again. I like probably twice. But I still have my long trade in right here. and I wanted to take out, my TP was gonna be right here. So what happened? Yeah, so this is what happened. So I was still in my trade, man. I had like, just doing 0.50, I had like $9,000 to like, from like right here, but I didn't get out. I was still holding, and then price came up. So this is why I drew that thing, because I'm like, so price came up here, but it never passed here. So this is why I drew this today, but today it actually passed. So I'm like, I drew this today, and so price never passed here, and price ended up, so I ended up getting out right here, like, because I got scared or something. I held through all this, then I got scared, and then I ended up getting up right, and I ended up getting out like right here. Then price ended up going down. And then this would have been my biggest trade like to date, because I would probably have like, man, I would have had so much money because I was doubling down. And then,
but the thing is, bro, you're chasing dollars. You're not focused on the right things. Your mindset to trading is real toxic for yourself. You're going to, if you're chasing the money's going to go up and down. You need to chase the same process. What you just did yesterday is completely different than what you did today. You also didn't follow the same set of rules. So because you didn't follow the same set of rules, you got different results. You literally said it. I was scared. Scared of what? Like, well, there wasn't nothing to be scared of. You just need to make a rule and stick to the rule. Your rule should be, all right, if I see structure points, it should have came back. Did it come back and hit structure? No, it didn't. So I continue to hold. And did it hit structure? Okay, you would have got out maybe right here, right? Because it hit your structure point.
Yeah.
But you need to be clear about what you're looking for, because if not, you're just going to be all over the place. So you're going to feel like, oh, maybe I should have held, maybe I shouldn't have. But if you stick to a consistent way of looking at the market and saying, this is what I do when this happens, then you're going to be okay. And then making the money won't be an issue, because the money does not come because you wish for it to happen. There's no hope in trading. You could hope and lose an entire account, and you could hope against that. You have to have an actual plan of what you're going to do when something happens. And when you follow that plan and you're consistent about that plan, the results always take care of themselves, depending on how well you plan things, right? Mm. If I plan to go to war and I ain't have no guns, it doesn't matter how much I hope to win the war. I ain't gonna win. Mm. But if I go to war and I know where the enemy's bases are and I've got nuclear weapons and stuff like that, I'm probably going to win the war because I have probably an advantage. That's how trading has to be. You're going to war with yourself, really. Your own emotions are your own enemy, because your emotions told you to get out of trades, to get out of this trade doesn't really help you, because your emotions were wrong. The reason why you got out didn't have anything to do with anything structure-wise. Mm-hmm. There was actually no reason for you to even get out, because market structure was continuing to go bearish. Mm-hmm. So that, like I said, like, you got to have it based upon something concrete. Like, your emotions will tell you that. One day you'll feel great, so you'll hold trades. Next day you'll feel horrible, so you won't hold trades. And if you take a loss, then you're really not going to hold trades. So you can't operate fear. Mm-hmm. Like, there's no such thing as fear in the market, because what the candles ain't doing, they ain't done nothing to you. They ain't shot you. They ain't done a single thing. You know, like, there's no danger on the charts. This is what Mark Douglas talks about in Trading in the Zone. Like, it's literally all the candles do is show information. That's it. So what is there to fear? You know, like, you make a concrete idea of what you're going to do, so that by the time it happens, you don't have to think about it. You're like, I draw a line here. Cool. If it comes to this line, I'll come out. If not, don't. Move your stop loss there. Very simple. Move your stop loss there. That way it's a non-negotiable for you. And that way, if it hits it, you're out. If it doesn't hit it, you're still in. Very easy.
Yeah, yeah. So yeah, exactly. So since me getting out on this day, and I was like, wow, this would have been my biggest day, and just doing a 0.50. And then, so that's why today I drew that line, and then it actually didn't have that as much as momentum. And I was proud of myself for not being greedy, thinking it's going to come down. It went above the line, and I clicked out, and price ended up going upwards anyway. So yeah. I think that's what I'm gonna start doing. And I was so probably scared on this trade, I didn't even see that this was a zone right here regardless, that only been tapped once. So
Yeah.
it's still very valid.
Yeah, that's what I'm saying, bro. Like, focus on an actual plan. Don't focus on your emotions. Your emotions are going to constantly change.
Mhm.
So you're going to feel it sometimes you're not. You got to make a plan and stick to it. And you
Right.
got to practice your plan so that you know what to do, so that when you're in the moment, you're not having to think about it. It's like you're just following and executing. Like, you want to know how the strategy, how you analyze, the strategy, how you execute, and the strategy, how you manage. And just go do that every day. Like, that's where you get consistency. The money itself, who cares what you make on one single trade? Question is, a month from now, can you still be trading? Because statistically, in 90 days, most traders, over 90% of traders, going to lose all their money in 90 days. That's all it takes, 3 months max. So you don't need to care about any single trade. You always need to focus on, am I consistently doing the same thing over and over? Because I guarantee you, if you're consistently trading 3 months from now, this won't be your largest trade. You'll have 5-10 more trades larger than this one, because that's what the power of consistency does. What y'all, I don't know. I know this is not covered in the course, but it's one of my personal philosophies. When it comes to trading, compounding is the best thing that you possibly could do.
Mhm.
You make average $1,000 on a trade now, but when your account's bigger, the same percentage of growth ends up being 10,000. And then a couple years later, the same percentage of growth ends up being 100,000. But what changed? What changed was the amount. What stayed the same was the process. Like, that's literally the goal to trading, is just consistency. If you are consistent in profit and consistent in executing your plan, the profits are going to consistently grow bigger and bigger. So you don't have to think about how much am I going to make on this trade, et cetera. Like, that's a toxic mindset.
Yeah, I totally understand. I totally understand. And you're right. And I'm, but I feel like it just stepped, because my first thing, my direction was off, and then I didn't know how to enter the trades. Now I'm pretty much very good at taking good trades and very good at having patience. Now I just have to work on managing them.
Yep. It's the evolution process. Like I said, there's the 3 pillars of trading: analyzing, executing, management. You do all 3 of those, you're going to have a long career, because the money will be made by itself. It'll make it up for it. But all right, guys, with that, I'm going to leave y'all so I can hop to, sorry, I'm going to have to hop to another call after this, but wishing y'all the best in your trading. P Money, I'm wishing you the best in management of your trades, because you got the rest down. If y'all have any questions, feel free to ask in Discord. Glad to answer any questions, especially Suit Lead, Solomon, and myself. Safe trading for y'all guys, and we will catch up on Tuesday. So talk to y'all soon.
Peace.
All right, see ya.
Thanks.
Peace.